Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is February 13th. Today we're going to take a look at eBay. This is a e-commerce business out of the consumer discretionary sector. Let's jump right in and take a look at the video. And if you are new to the channel or you have not done so, go ahead and hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community. Hopefully you're on your own journey to financial freedom as well. Hit the like button if you find any value in this type of content, and hit that notification bell so you're notified whenever we put out any new content. Doing all of those things really does help a small YouTube channel like me grow. It helps out with the YouTube algorithm and to spread the videos further. Also, watch to the very end if you would. The YouTube algorithm does go on watch time, so watching to the end of the video or as much as you can really helps as well. Thank you so much. Now this is the Vested Interest stock screener. This is how I set up the videos here, the stock pick of the day videos. And it is also how I look at a company from a high level to see if it is one I am interested in investing in, or if it's already in my portfolio, how I look to see if the company is still meeting the criteria I have set. You can pause this and go through this, but we're going to run through this criteria in this video for this company. So we'll start with the company. If you want to know more about them, check them out at www.ebayinc.com. That is their homepage where I pulled this information from. That's www.ebayinc.com. That is their homepage. And eBay, right here is their founder way back in 1995 in September. ActionWeb. That is how it started. So it didn't start out as eBay. It started out as ActionWeb. After spending Labor Day weekend at home writing code on his personal computer, eBay founder Pierre Omidyar launches ActionWeb, a site dedicated to bringing together buyers and sellers in an honest and open marketplace. And that's really what it is. It's an online marketplace. Now, there are a lot more of them now, but back then this was the very first one, so it does have some brand recognition. I'm sure all of you know what eBay is. Maybe have used it in the past. I know I've sold some things on eBay before. I don't know that I've ever bought anything on eBay, but I know I've sold some things on eBay. We connect people and build communities to create economic opportunity for all. At eBay, we create pathways to connect millions of sellers and buyers in more than 190 markets around the world. So, being an internet company, they obviously have a footprint all around the world. Our technology empowers our customers, providing everyone the opportunity to grow and thrive, no matter who they are, where they are in the world. And the ripple effect of our work creates waves of change for our customers, our company, our communities, and our planet. Excuse me. So again, if you want to know more about them, check them out, www.ebayinc.com. Now, the reason we are taking a look at them, down 5.43% on the day, big drop. We are talking about eBay Inc., ticker EBAY, closed out the day at $41.13. 52-week range as low as $37.17, as high as $49.66. They are a touch closer to their 52-week low than their 52-week high, kind of floating in the middle, but a little leaning towards the low. Average volume 6.3 million. Today's was 6.9. You can see that sell off throughout the day here. Beta is 1.3, so they are more volatile than the overall market. Price to earnings ratio sitting at $8.26 per share. Earnings per share sitting at $4.98 per share. The earnings date coming up February 20th through February 26th, so look out for that if you're interested. For dividend is $1. So divide by 4, they're a quarterly payer. We'll see that here in a little bit. Dividend yield, nice starting dividend yield at 2.3%. Ex-dividend date was November 30th. Looks like they paid out December 15th. So if you were to buy them now, you would be in line for their next dividend payout. And according to Yahoo Finance, where I pulled this information from, not affiliated, just one of the sources I go to for information, they have a one-year target estimate of $45.45. So they see it going up in price from here, but setting a new, not quite back to 52-week high. So 45.45, but not getting back to the 49.66 that it did previously. Now, I like to get into statistics, and we're going to look at dividend yield theory. To do that, you'd click on statistics over here on the right. On their home, if you go to Yahoo Finance, you'll find it over here, or I'm sorry, on the left here. And you'd go down to dividends and splits. You look at their 5-year dividend yield average, 1.46%. Compare it to its forward annual dividend yield, 2.3%. same number over here, 2.3. And since it is higher, it speaks to some undervaluation. It also looks like it has a bit of a margin of safety, at least according to dividend yield theory. Very low payout ratio, 19.48. So they have a lot of room to increase this dividend over time. Now, you want to get into the finance. If you go over here to the left on Yahoo Finance, you're going to see financials, and there's a lot of good information there. You can look at their balance sheet, their income statement, their debt to equity ratios. Is their revenue growing? Are they paying down debt? Are their margins expanding or contracting? How do their assets over liabilities shake out? You want to look at all that information. For our purposes, we're going to take a look at free cash flow. We want growing free cash flow over time, because typically if a company has growing free cash flow, they have growing dividends to go along with it. And I like growing dividends over time. So we're going back to 2020, 1.9 billion, 2021, bit of growth here to 2.2 billion. 2022, it looks like they've got a little bit of a lag here from 2.2 to 1.8 billion. Back up again so far in 2023, 2.5 billion. I'll say from 2020 to date, 2.5 to 1.9 to 2.5 billion. There is definitely free cash flow growth. They are also repurchasing their shares here. You can see that repurchase of capital stock. So very nice to see them buying back their shares over time. That helps you out as a shareholder. If you were to buy 10 shares today and they continue to repurchase shares going forward, that would make you more of an owner of the company over time. Now, I always recommend more than one source. Another one that I like is stockanalysis.com. You pick any sources that you like. Just make sure you're picking more than one so you can make sure the information you're getting is accurate and up to date. Now, they have 17 stock analysts that have taken a look at this. They call it a consensus hold. And if you were to go to stockanalysis.com, you could click on this, see how many called it a strong sell, a hold, a buy, or a strong buy. They're calling it a hold, though it is right on the edge of a buy there. So maybe a few more leaning towards the buy than the sell. Or from the hold to the buy, you'd have to go in the website and see what the breakdown is of those 17 analysts. They have a low estimate of $32, which would be a 22.23% decrease from where it currently sits, and that would be a much more attractive buy-in price. I would really like this under $40, maybe even under $38. I'm really not interested in this one, but if you're looking for something with a very low payout ratio, a lot of room to expand it with a good brand recognition in the e-commerce space, consumer discretionary space, this might be one to look at. Again, low estimate of $32, a 22.23% decrease from where it currently sits. Average estimate of $48.71. That would be an 18.39% increase from where it currently sits. This would be a little higher than what we saw from Yahoo Finance. And if it happened to hit their high estimate of $56, that would be a 36.1% increase in the stock price. If you were to buy them now, all the while you could collect that 2+% dividend yield. Now, I like to get into statistics here, look at return on equity and return on invested capital to see how the company is doing with its funds reinvesting back into itself. I like 10% or better for this metric, and it is smoking high. Return on equity sitting at 50%, much higher than the 50 or the 10% I'm looking for. Return on invested capital at 11.63 is just a tad over the 10% I'm looking for there. Now, earnings per share growth, they did not have anything listed. I like 5% or better here, but they did list revenue growth at 4.02%. So revenue is expected to grow over the next 5 years. I'd need to do a little bit more research, see why they're not putting an earnings per share growth forecast here. Let's take a look at their dividend. Again, very low payout ratio. We saw 19% and some change from Yahoo Finance. Stockanalysis.com is saying 20%. I mean, right at 20% is still very, very low. I like 75% or less for that metric. Very fast dividend growth, 13.64%. They do pay out on the March, June, September, December timeframe like most companies do. And we went back to November 30th, 2020. They were paying 16 cents. February 2021, they raised it up to 18 cents. March 2022, up to 22 cents. March 9th, 2023, up to 25 cents. And I would expect probably in the March payout for them to raise it again if they are going to maintain this dividend growth. So very low payout ratio, very high dividend growth. The only thing that I would really say on this one, excuse me, I'd like a bit more of a pullback. I'd like it under 40, maybe even under $38 for this one before I'd be interested. But I really like the dividend growth. I really like the low payout. Nice starting dividend yield to over 2%. Quarterly payer. Again, if you're looking for something in the e-commerce space, consumer discretionary space, this might be one to take a look at and see if it does pull back further. I don't know how this one grows going forward. It is in a lot of markets already all around the world. E-commerce is pretty competitive now. There are a lot of them popping up. But this one kind of is a niche where you put things online to sell, and they have an auction feature. But again, there is some competition here where there wouldn't have been, even 10, 15 years ago, as much competition as there is now. Everything's going online. So I don't know if there'd be a lot of growth in this one, but that's why they're enticing you with the dividend. Well, let me know what you think of eBay. Do you use their site? Do you even know, maybe some of you younger folks, do you even know what eBay is? Let me know in the comment section below. And what do you think of the company? Do you think it's still worth investing in? Do you think it's still growing? Or do you think it's kind of stagnated and it is what it is at this point, and maybe better options out there? I lean towards the latter, where the dividend growth might be worth it, but I just don't know how much growth overall they have. It's pretty well built out company, and there's pretty saturated in the market now. A lot of other e-commerce companies coming up, where I don't know if they have a competitive advantage or a moat to speak of. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join the vested interest community. That's right, hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. We are dividend growth investors. That's what we focus here on this channel. Hopefully you're on your own investing journey as well. And drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like eBay you'd like me to cover in the Stock Pick of the Day series, drop it down below, and I'll work it into the rotation on the day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investor journey for educational, and entertainment purposes. Investing involves risk. You can't use money to never invest any amount you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.